Good evening, Trade Flare family. Welcome to the Nightly Breakdown, where we do a technical analysis of the SPY and 5 stocks to give you guys a better idea of what we're looking at into tomorrow. Now, before we head over to look at some potential plays in depth, we're going to first look at our sectors and indices watch list here so that we can briefly get an idea of where we stand. And right before we go over to the plays, we'll dive into a short technical analysis of the SPY, the Qs, and IWM. So without further ado, let's dive into our brief sector analysis, first looking at where our indices closed. So today we saw the IWM really lead to the downside, while the Qs, the Dow, and the S&P were really matched up right around 0.6% down. The TLT, or the Treasury bonds, the 20-year Treasury bonds, were up today, which means rates were leaning to the downside. The dollar was up, VIX was up, and the SQQQ, which is a triple leveraged ETF that shorts the NASDAQ. So keeping that in mind, we have volatility there. We have the dollar creeping up. We have bonds creeping up. So not really a risk-on situation like we've had in the past few weeks. So keeping that in mind as we head into the rest of the week. So next, looking at our sectors, and I've organized them from heaviest to least heaviest weighted here. So as you can see, the XLK sector is the heaviest weighted sector here, and it is at the top, and the XLE is going to be the lightest, and it's going to be at the bottom. So as you can see, the XLK closed red today, right around the top, heading back into this previous range. So look for that possibility to pick up, especially as we head into Jackson Hole tomorrow, and we have a lot of information potentially to be released by Jerome Powell there. So keep that in mind heading into Jackson Hole. Next up is the healthcare sector. So looking at this one also looks like it could be pulling back a little bit. As you can see, we can draw a trend line. Looks like we still we've definitely taken out this most recent trend line and closed beneath it. So keeping that in mind as we head into tomorrow, this XLV, this healthcare sector, could be in for a pullback, but remember, the XLV is going to be fairly defensive, and if we do start to see some volatility, we could see some money start to flow to the XLV. So keep that in mind. Next up, looking at the communication sector. This one had a little bit of a bigger move. So this one's more of risk on. That's why we're seeing a little bit more action in this one. We saw some communication stocks like Snapchat, like Facebook, kind of get some action to the downside today, and that is because we have a lot of fear overseas, as well as we have TLT, people going into bonds right as something big news just happened. So people kind of getting some fear, the VIX popping, and then we're gonna take a risk off approach here. So the communication sector is going to be a growth sector. It's going to have a lot of riskier tech names in there. So keeping that in mind as this one started to take a move to the downside here. This one moves a lot like tech and a lot like consumer discretionary. So more risk on sectors, growth sectors, cyclical names did not fare well today. So keeping that in mind as we are here. This one looks like it could pose a trading opportunity as we are right at this 50-day SMA. If we do take a break below this 50-day SMA on the XLY, this could be a potential move, a potential easy trade down to fill this gap, and then potentially head down to these lows around 174.75. So something to keep in mind when trading the XLY, or just looking at these sectors and watching them into tomorrow. Next up is the XLF here. So this is the one that we're looking to really take a short play on. We've got a double top here, pretty much looking at a double top. We're looking to basically capitalize on Jerome Powell doing nothing when everybody wants him to do something, and that lines up perfectly because we've seen a lot of Fed members come out very hawkish to kind of make everybody be like, okay, yeah, it's going to be really hawkish. It's going to be really hawkish. We're going to get that move in. We're going to get that taper. We're going to get that taper. But as we head into tomorrow, we don't know what Jerome Powell is going to be saying. So keeping this in mind, if he does not if he does not say anything fairly hawkish, that is going to tip off the bond market. People are going to start buying bonds. That is not going to be, and is not going to bode well for the financial sector. So if bonds start going, and as you can see, I'm going to pull up the TLT here, as the TLT looks like it has a bull flag right here, pulling right back to its 382. This is the most bullish case scenario on TLT. If we do end up, going higher, taking out this 148.73, this recent area of resistance, and then going higher and breaking this resistance trend line of this bull flag, that could be fairly bearish for the XLF or the financial sector here. So we are looking at short plays. We got into puts today. We have our stop losses right above or $39. So keeping that in mind, if we do go ahead and break above that level, this trade might be off. And it's all going to depend on what happens tomorrow at Jackson Hole. So keeping that in mind in the XLF. Next up, looking at the XLI, and looking at this one, kind of just sitting in the middle of a range. Doesn't look like it really wants to do much here. If we do get some action here, that would be interesting. Not really looking at the XLI for now. Next up, looking at the consumer staples sector, and this is very interesting because when we see consumer staples, we see a lot of positive sentiment in retail, but at the same time we see this as defensive as well. So keeping this in mind here, not really a defensive approach into consumer staples, but rather people moving into bonds, people moving into the dollar, people moving into gold. So something to keep in mind there. Kind of points towards some. It kind of acts as an indicator there. And next up, looking at the material sector here, and this one as well, it doesn't look like it's kind of at a resistance trend line here. As if we draw a resistance trend line, kind of at a resistance trend line, has a little bit of ways to go here to get to this resistance trend line. Kind of backing off here. I would not be surprised if we head down just to test this 50-day moving average. If it breaks, that's going to look fairly bearish, probably take us down to this 200-day SMA or even these lows around 78.90. So keeping that in mind here in the materials sector, not looking fairly bullish unless if we do get some action, take out these highs around 86.60. So something to keep in mind here in the materials sector. Next up is the real estate sector, and this one right here was the only sector that held up today, so something to keep in mind there. This one's not really one we like to trade, but it is going to act as somewhat of an indicator, so something to keep in mind. People not really backing out of real estate yet. And last up is the energy sector, and this is the one that's going to be looking fairly bearish, and this is going to have an inverse relationship with the dollar. So as the dollar, people start pouring into the dollar, so as you can see here, as the dollar has been going up, oil has been going down. So something to keep in mind there. This correlation is fairly tight, so if we do start to see the dollar move up rapidly, then we really want to get short on this energy sector. So I'm also looking at the fact that there is a support trend line here that we recently broke, came back above, but these buyers are still weak and these sellers are still strong. So if we do end up breaking back below this support trend line on around 46.40, I would expect and right around that 200-day SMA, I would expect a flush lower. How much lower? Probably down to fill this gap up to these highs over here, right around 44.62. So keeping that in mind there, watching the XLE and that correlation with the dollar. So now that we have a broader idea of where we stand, let's dive into the watch list. And first up is just going to be XOM. It's just going to be exactly like the oil play, just like the oil sector that we just looked at, or the energy sector that we just looked at. If we do break below this recent support trend line that we tried to go back above, and the seller or the buyers are just weak here, weak-handed buyers, short-handed buyers. It looks like we could go lower if we do take out this 200-day SMA here. That's going to pose a short trade down to at least these lows around 52.18. And if we do go ahead and take out these previous lows, which is definitely possible, being this bearish at this point, we could definitely go down and chop around these levels around $50, and even potentially back to 2020 levels, or back to around $45. So keeping that in mind as a low side target for the oil if we do get a huge rise in the dollar in the next coming days from a reaction in the markets. Next up on the watch list is Gilead, and I'm looking at this both ways because we had some big news for Gilead today. It was like a billion dollar deal where they beat. It was a court case where they won. It was a $1.2 billion court case. Next up is Gilead, and the reason I like Gilead is because they had a lot of volume today because of this court case that they won. It was like $1 billion court case, and it was some sort of patent court case that they won with Bristol Myers. And I like this because even if it was a positive sentiment, this could have already been priced in, and this looks like it's running out of momentum at the point. Volume's tapering off, TTM squeeze is kind of tapering off, and we're trading at the lower end of the range. So if we do take out the bottom end of this range, this previous 7-8 day range here, we could end up going lower to fill this prior poor structure all the way down to 70.45. So this could pose a potential low risk trade that is flowing through poor structure, low volume, and that could be a decent trade. So keeping this in mind, Gilead to the downside. If we do get a boost in volume, buyers buying on that tomorrow, if healthcare does decent tomorrow, then this poses an opportunity being at the bottom of a range here. So it's all going to depend on the open, whether we take out the $71 level, or if we end up trying to go higher, take out today's close or today's open and go higher into probably a line would probably be $72 is where I start to look for calls up to 73, just using that $1 delta as a benchmark. So keeping that in mind here, Gilead could be a potential trading opportunity as we head into the rest of the week. Next up is Etsy, and a lot of the stocks that seemed fairly defensive today were like Amazon, eBay, Etsy. The consumer retail, the online retail space was doing really well today. So Etsy was one of the winners today, up 5%, breaking out of this previous range that we were in, down and right around from 180 to all the way up to $206. So we took out that range, took out these previous highs, and closed above these previous highs. Now we are seeing a little bit of resistance right here from these previous highs, but shouldn't act as a major line of resistance for here. If we do end up taking out the 26 or 216.44 level, I would expect to go higher, even all the way up to these highs around 226.63. So keeping that in mind as we trade Etsy looking into tomorrow. So next up on the watch list is Square, and Square actually poses a potential short opportunity here. We've got we've been talking about this range, and we looked above this range and failed. We completely failed. Buyers failed to take this thing and break it out of highs. So, and now as the market stands, risk off, and this could be pointing towards a negative move back to the bottom of the range, or at least to the middle of the range here on Square. So we look above, fail back into the range here, the range between 280 and 191. That's kind of the range we're looking at here. So now that we've failed, we're looking at this support trend line here. If we do take out the support trend line and kind of looking at that 50-day moving average on the daily here, if we do take out that level, that's going to act as a break level where we could probably treat this head and shoulders as a head and shoulders at this resistance trend line. So keeping that in mind, this does pose a bearish trading opportunity to the downside. First level I'm really looking at to trade to is that 150 support level, 152 level. We've got some candle touches up here, a lot of candles touching up here over here previously, and right around that 250 level. So keeping that in mind, if we do take the break of today's low, we could have a trade all the way down to $253 in Square. So keeping that in mind, in Square, bearish as it stands. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, make sure you hit that like button and don't forget to subscribe so you don't miss out on any live or educational content. If you're looking to join our premier trading community, then check out the link in the description below. Join our Discord, upgrade to TradeFlare Pro to get full access to our whole Discord. And don't be mistaken, we are not financial advisors, nor do we claim to be. The stock market is risky and you could lose money. And as always, you cannot forget that time is your most valuable asset. Quit wasting it. Get up, get out, and go get it, my friend.